Chinese artificial intelligence company DeepSeek took the world by storm with the release of new AI models that are seen as competitive with, if not better than, OpenAI's ChatGPT. To complicate matters, DeepSeek said that one of the open-sourced models was developed for less than $6 million. Compare that to the over $100 million price tag for ChatGPT 4. There's debate on Wall Street whether DeepSeek was really able to train the model that cheaply. But whatever the cost, investors now seem to be coming to terms with the fact that developing AI is going to be cheaper than people once thought. And that's rattled chip stocks that have ridden the wave of AI spending lately. Nvidia lost about $600 billion of market cap in one day, showing that investors are worried that the furious spending frenzy will die down. But now that the dust has begun to settle, what could this mean for investors? To find out who wins and who loses, I spoke to news editor Emily Berry.
When you think about the biggest winners and losers from DeepSeek, one name that comes to mind as a possible loser is OpenAI. And that's because the company has raised so much money thinking that their ChatGPT chatbot was really going to be the next big thing in large language models and was going to win the game. And now you're seeing there's probably going to be a lot more competition on the market. OpenAI got $6.6 billion in new funding in October, and that helped the company fetch a $157 billion valuation. Now that DeepSeek has shown that it's possible to develop AI models at such a lower cost using open sourcing, some investors might be thinking, did they really need to spend all that money on AI chips? Other losers could be energy companies. You had stocks like Constellation and Vistra that were huge gainers last year, and the hope was that they could be powering AI data centers, which are so power intensive. But now DeepSeek has shown that it's possible to develop AI at a much lower cost. So the question now is, do we really need all this power, and are these companies going to have the same bullish outlook that investors thought a couple weeks ago?
OpenAI has claimed that future AI models are expected to push past $1 billion in development costs. So the release of DeepSeek's version 3 for just $5.6 million could be a game changer. And this could mean a big upside for tech companies investing in AI products.
There are a couple US companies that are emerging as potential big winners from DeepSeek. Over the past few years, the hot names when you thought of AI were chip companies like NVIDIA and makers of large language models like OpenAI. Now software companies could really get their shine. You have companies like Salesforce and ServiceNow that are kind of like taking these large language models and they're making applications that help them work in the workplace. And if the cost of AI is going down, that means they might be able to offer this at a lower cost to their own customers while also protecting their margins. That could be a good thing for them. Even OpenAI partner Microsoft could see a benefit. If you think about Microsoft, they kind of have a mixed story here because they've invested a lot in OpenAI and they've also invested a lot in AI GPUs. But the company isn't backing down from their OpenAI partnership or this big spending. Microsoft has its own software offerings like Office 365 Copilot that let you basically have an AI assistant when you're working in Office apps. If the cost comes down, this could be good for adoption.
There aren't any signs of this AI battle slowing down. Chinese multinational Alibaba released their own large language model named Qwen 2.5. That's their answer to DeepSeek and OpenAI's ChatGPT. And Alibaba is claiming its model has already surpassed both in recent benchmarks.
Developments in the AI world are so fast-paced that it feels like there's something new happening every week. Investors should focus less on the latest cool chatbot and more on the application layer, or the software that's helping put this AI to work in the real world.